With 2021 coming to an end, Egypt's economy stands at a crossroad. After nearly 2 years of COVID-19, Egypt had lifted nearly all pandemic-related restrictions, while speeding up its vaccination efforts with almost 40 million vaccine doses administered. Let's have a look at a snapshot of the economy during the previous year. Egypt was able to weather the COVID-19 storm for the second consecutive fiscal year and achieve a positive growth rate of 3.3%, primarily driven by solid private and public consumption and a reviving investment sector. From a sectoral perspective, the communications sector recorded the highest growth among all economic sectors during the last fiscal year, followed by the construction, transportation, and storage sectors. Digitalization has touched upon almost all sectors, which contributed to their performance. Positively, the IMF expects Egypt's economy to grow at a rate of 5.2% in the current fiscal year and 5.6% in the next one, signaling a strong recovery to reach pre-COVID growth levels. Egypt has been investing heavily in major infrastructure projects and new cities, which have created much-needed jobs, particularly in the construction sector, and helped to mitigate the negative impact of the pandemic on the labor market. The unemployment rate resumed its improvement path, reaching 7.5% in the third quarter of 2021. During the last fiscal year, inflation went down from 5.7% to 4.5%, given the lower aggregate demand induced by the pandemic. However, inflation has been gaining pace since mid-2021, given the global supply chain and energy disruptions and increased global consumption recovery. Though it remains within the Egyptian Central Bank's target range of 7%. The exchange rate has also been largely stable since the start of the pandemic at 15.7 Egyptian pounds per US dollar. Net international reserves have been increasing steadily to stand at almost $41 billion by the end of September 2021. Additionally, domestic credit to the private sector has significantly increased during 2021. This resulted in a growth of domestic liquidity. Looking at the external sector, Egypt recorded a positive balance of payments of $1.86 billion mid-2021 compared to a negative balance of $8.6 billion the year before. This significant change was mainly driven by the capital account. On the other hand, and despite improvements in remittances, non-petroleum exports and petroleum imports, the continued plunge in tourism revenues and the increase in non-petroleum imports have all widened the current account deficit. While external debt increased during 2021, its debt-to-GDP ratio remains within manageable and sustainable levels compared to peer countries. On the fiscal side, Egypt's budget deficit has been steadily decreasing since 2015. With the ongoing tax amendments and the gradual recovery of economic activity. Overall, Egypt's fiscal policy has been geared towards stimulating economic activity, creating jobs, improving the quality of public services, and enhancing the efficiency of social protection programs, all while keeping fiscal sustainability. The private sector, which contributed almost 70% of GDP in 2019, is also getting much-needed attention, with Egypt moving to list many state-owned firms in the stock market to encourage private sector involvement. Measures in support of the stock market were also introduced. And with Egypt 2030 vision in mind, one of the biggest social and poverty alleviating initiatives, Hayat Karima, was launched this year, allocating 700 billion Egyptian pounds to improve the lives of more than 50 million individuals. In the coming year, Egypt's economy faces risks of pressures on its exchange rate due to a widening current account and a continuation of pandemic-related disruptions. In addition, with global commodity prices being at multi-year highs, inflation is at risk. and posing a possibility of higher interest rates. How can Egypt continue to grow in a sustainable and inclusive way?